Hello and welcome to this lesson. So in this lesson, we're going to look at how you can identify high probability order blocks. So basically, not all order blocks are high probability. So we're going to look at the elements in more detail and with examples of how you can identify high probability order blocks. So basically, the two things that make an order block high probability is the higher time from order flow and liquidity. So liquidity means if we have taken out either buy side liquidity or sell side liquidity, that's what makes the order block high probability. So for example, in this example, we are looking at a bearish order block. So this is our bearish order block right here. And when this order block is now confirmed here on this candle, so when this candle closes below that, the low of that candle, then it confirms this as a bearish order block. Then we get a retest of that order block. So we're getting the opening of that order block being retested, and then the market now continues lower. Now, for us to define this, or maybe what makes this a high probability order block, that when the market retests it, it will probably continue lower, is number one, higher time frame order flow. That is one of the major things that will make this order block to respond when it is retested, to respond lower and not go any higher. So basically, when we look at the weekly chart, so we are going to look at the weekly chart shortly. I'm going to outline the weekly order flow, which is now our higher time frame. Because we are on the Australian dollar daily chart, our higher time frame will be the weekly chart. So we'll look at the weekly chart and define the order flow on the weekly chart, which supported now this movement here lower. And then, of course, any up close candles that were formed within this range here was defined as the order block, and it will be a high probability order block. So let's move to the weekly chart. So on the weekly chart, you can see actually that the market had initially taken out some form of buy side liquidity. So this is the buy side liquidity I'm referring to. So the market initially took out buy side. So this is buy side. So this is buy side liquidity which was ran. And then immediately we ran those buy side liquidity, the market started going lower, confirming even bearish order block. So you can see this is a weekly bearish order block here being confirmed on this candle. You can see immediately it retested. We got that movement lower. We got that collapse lower. So essentially this instance here on the daily chart now, on this move here lower on the weekly chart, because now we are bearish on the weekly chart, anything on the daily chart that is created as a bearish order block will or should support prices lower, because already the market has indicated bearishness and we have taken out buy side liquidity. So we're definitely going for sell side liquidity. So when you go back to the daily chart, you can see that that buy side liquidity was taken out here on the weekly chart, and then the market started dropping lower. So any bullish candles created on this move here, because we are bearish on the weekly, becomes a bearish order block, because it becomes a high probability bearish order block because we are bearish on the weekly chart. So and then liquidity that was taken out was that weekly liquidity, and any other liquidity that may be run even on the daily chart and then form that order block will be actually will help us to identify those high probability order blocks. So this is an example of a high probability order block. Once it was retested there, we got that collapse lower. So this is an example of a bearish scenario. So let's look at the bullish scenario when we move to the pound USD. So this is the pound USD daily chart. We are also still identifying high probability order blocks. So I've outlined an example here. This is the high probability bullish order block that was created around this area here. So basically, as we have outlined, we have the liquidity. So this liquidity, it was taken out on the daily chart. So you can see this low here, the low of this candle was taken out here, and then the market started moving high. So when the high of this candle was closed above right here on this candle here, this becomes a confirmed bullish order block, and it's high probability because we have sell side liquidity that has been run. And then we can now go to the weekly chart, because we're on the daily chart now, to look at maybe anything that supported that idea in terms of making higher time frame order flow bullish. So if we go to the weekly chart, you can see actually we had a weekly fair value gap right there. So this key level will have supported that idea of bullishness, and also the market was already bullish on the weekly chart. So the higher time frame order flow is bullish, and we also have that higher time frame key level that the market will have used now. Once the order block is created in that area, to make it high probability order block. So basically this order block is high probability because we have formed, so this is a weekly 1 week fair value gap. So we have a higher time frame key level, we have sell side liquidity that has been run, and the weekly order flow is already bullish. So basically we have all the conditions to define this order block as high probability, and now when the market confirms it, any retest of that order block is high probability to continue higher, because already we are bullish on the higher time frame weekly, and we have hit that higher time frame key level, and we have taken out liquidity. So those are the elements that you need to look at. So you can go into your charts, identify those high probability order blocks so that you can start getting familiar with them. Thank you so much for watching. I'll see you in the next lesson.